Welcome everyone to today's webinar. The proof is in the proposal. This is sponsored by our awesome partner, Fairway Independent Mortgage Corporation. My name is Zach Hewells and I work in the Marketing Communications Department at NAFA. And we are very excited to have our partners here today, Harlan and Nicola. Harlan, welcome.
Hello, everyone. Glad to have you here. I'm going to give a very short introduction to a very important guest that we have on tap for today, and I want to get to him just as quickly as possible. But understand the reason why we are doing this. Many of you saw my column, which is talking about the malpractice of financial professionals. And the problem is that none of us want to do that. But because there is not enough of a marriage of information that flows between people in the mortgage side of things to the people that are doing the financial planning side, as a result, many clients do not have the best financial plan, the best retirement plan that they should have. Now, I grew up in Wisconsin, and that's where a company called Kimberly-Clark started. And a while ago, quite a few years ago, they came out with a product called Tissues, but we referred to it as their brand name was Kleenex. And everybody refers to it as that because that was the first one. We believe in the future that people are going to look back at the product that EquityTrax and Fairway created called EquityTrax and look at that as the Kleenex of the financial planning world that finally married the home equity planning and home housing wealth with the other side of the equation that all of you work in on a daily basis. When those two things are put together, remember we have the people at Fairway, we have 600 offices, over 4,000 licensed loan officers. And there is no one in the country that does as many reverse and forward mortgages together as our company because we work in conjunction with other local professionals with our 600 offices. We are looking to partner with NAFA because there's 25,000 of you around the country. And all of you are looking to do the same thing that we are. And that's to make a positive difference in the lives of the clients who look to you and to us for advice. We can't do it alone. We don't sell insurance. We don't sell assets under management or mutual funds or annuities, but you do. And together with the things that we do on the mortgage side and the things that you do on the asset planning side, we are able to make sure that we put our clients into a better situation. Up to this point, it's been really difficult to explain reverse mortgages. I always joke with advisors that if you put together a seminar, excuse me, with cash value life insurance, annuities, and reverse mortgages, nobody would show up. It'd clear the room. But guess what? If we properly explain how these things give a solution to many of the retirement problems that are out there, we change the world and we change the way retirement is done in this country. Now, that's all I'm going to have to say as I introduce Mark Guthrie, who is the CEO of EquityTrax. Many of you are familiar with EquityTrax. For those of you who aren't, you're going to want to get very familiar with it because it is one of the most fantastic tools. I went to my first Circle of Wealth conference and saw this over 10 years ago. And it changed the way I looked at life insurance. It changed the way I looked at my retirement. And my retirement is better. Today, at 60 years old, my retirement plans are better because I ran into Circle of Wealth and EquityTrax over a decade ago.
Well, thank you, Harlan. I appreciate that. Not a problem. Happy to be on the call with everybody. Very excited. You know, it's amazing the parallels that exist between our lives, my life as a financial advisor, and the life of a lending officer talking about forward and reverse mortgages. I'm going to share my screen here and just give you a little bit of a graphic and help you understand what our challenge is. So as financial professionals, for one, we need to know a lot. I mean, our products are complex and our advice is complex. But as important, more important in a lot of ways, the second thing we need is we have to be able to communicate what we know in a short period of time. Well, for 30 years, the Circle of Wealth has been working really hard to translate what you see here on the left to something that people actually can see, can understand, and can get excited about. And we've come up with what we call our personal economic model, which is a picture that can help somebody understand their entire financial picture, both inflows and outflows, as well as assets and liabilities on a single screen. So when we talk to people in the world of EquityTrax about how their finances work, we show them this diagram. And we talk about the fact that while they're working, they're making income. They have a lot of potential. If you add up all the income for most of our prospects and clients, it's in the millions of dollars, but it flows in slowly. The first thing that does is hit a tax filter, and the government takes their share. We don't control that. The next valve it hits is what we call our lifestyle regulator. Pretty simple. You can spend everything on your current lifestyle and probably have a pretty bleak retirement. Or you can choose to save some money in a combination of your asset accounts and building equity in your house and be able to save that money so you don't live as elaborate of a lifestyle today. But what happens over time is you build up value inside your tanks so that in the future, when it comes to retirement and that income slows down or shuts off, you can then take these dollars and be able to live on these during retirement. So already you might be looking at something and going, wow, I've never really seen anything like this before. How, does this really work? Do people really understand this? Well, I'm guessing just in less than 3 minutes, you understood the concepts here. And what we can do with this is we can leverage this through multiple conversations. We can leverage it through a life insurance conversation, through an annuity conversation, assets under management, protection. And certainly we can look at this from an equity management perspective and help our clients understand the trade-offs between having a paid off house and maybe very little money inside their tanks, or they could have a liability, but have the same or more dollars inside a savings environment that would provide more liquidity, use, and control during their working years and during their retirement years. So just like that, you're beginning to understand the visual that we can share on the financial advisory side with EquityTrax with our clients to help them understand. And what's really pretty powerful that we've found in doing this personal economic model picture now for coming up on a decade is that when we put it in motion and we actually show somebody their personal economic model with their numbers and bring it into motion and show what a cash value life insurance policy looks like, for example, we can see that it comes to life. We can see that you can see the building up of cash value. You can see the net death benefit, and you can understand where it is in proportion to their overall finances. So if you're a financial advisor and you're talking to somebody about cash value life insurance, do you want to be working off an illustration, or would you rather be working off a picture like this that's dynamic, that can show the movement and show the interaction of that particular product? So what happened? Why are we together right now? Why are Fairway and EquityTrax working together? Well, because Fairway, when they think about presenting proposals for a reverse mortgage, their proposals, let me bring one up here, I got a lot of things open, but their proposals look a little bit like our life insurance proposals. Now here's a home equity line of credit proposal. You'll notice it is 73 pages long. And in that proposal, there's lots of legalese, a little bit of charts, and then a whole bunch of other stuff. I mean, lots of other stuff. But really, like our illustrations, theirs comes down to really a couple of pages of numbers. It's our amortization schedule, and it's a comparison down here. So again, we are visual learners. If we're trying to help somebody as an industry, financial professional industry, understand what a reverse mortgage does, how far can this get us from a graphical perspective, from respecting the fact that people are visual learners? It's pretty tough. So what we've done is we've leveraged, in working together, we've leveraged the circle of wealth system with the reverse mortgage business exclusively for Fairway. And we've created a whole separate program that will be used by lending officers called EquityTrax that will take in that very complex proposal and put it into a presentation where someone can understand what's happening with their finances using the personal economic model. So I'm going to run through an example here, and Paul's going to go through a similar one here, but this is just a sample. So we've got a client. They have an existing mortgage. They're 66 years old, and they're working their way into retirement. Now, in this case, we haven't put any value inside their savings tank because we want to focus on this conversation. So what happens? Well, every year they are going to be making payments on that mortgage throughout the time. And you can see here that they're making about $1,500 a month payments, $18,000 a year. And over all the years, it's going to be $200,000 worth of payments. That's the path that they're on. Now, could it make sense to look at a reverse mortgage versus maintaining this existing strategy? Well, I don't know. Let's take a look. So with a drag and drop, we can now see what a HECM reverse mortgage would look like for this particular scenario. So what have we done? Well, we've done a couple things. One, we've paid off the forward mortgage. Number two, because of the equity and the value of their house, there's also a line of credit available, and we've eliminated that payment. Now, we can show that payment being enjoyed in lifestyle, or we can show it being saved. I'll show both here real quick. So for example, here, when I start clicking through the years, we can see that their additional cash flow down here is growing every year because they're not making that forward payment. And every year that they move forward in their plan, they not only have more money to spend, but they're also establishing a line of credit, in this case, when they're in their mid 70s, almost $300,000. And if we get out to the time frame where many people start dealing with long-term care, maybe somebody out in their early 80s, we can see at that point in time, they have had an extra $200,000 that they've been able to spend. They would have a line of credit of $402,000 that they could draw upon. Very different position. So when we look at this side by side and we look at the mortgage on the left and the reverse mortgage on the right, we can see a pretty contrasting view of one's financial position. I mean, you can imagine if you're talking to somebody and you say, hey, when you hit 80 years old, what do you want your personal economic model to look like? On the left-hand side, congratulations, you've paid off your house. That's great. On the right-hand side, you have not paid off your house. However, you've established a line of credit that is actually greater than the liability you would have at the time, and you've added liquidity to your situation of over $370,000. Pretty remarkable. And if we looked at somebody and said, okay, well, that sounds really good, and I got an extra $200,000 to spend, what's not to love? But you know what? I don't need to spend that money. I'd rather save that money. So take that $1,500 a month that I was placing inside my forward mortgage and save it over here in my safe tank. What would that look like? Okay, great. Let's take a look at that. So on the left-hand side, again, is the existing forward mortgage. On the right-hand side is the reverse mortgage, but in this time, instead of spending the money, we're going to save it. So what does that look like as we work our way through our 70s and into maybe our early 80s? Well, we'd see that, again, on the left-hand side, our house is paid off, good position to be in. On the right-hand side, we have a house that has the same value, less equity because there's an outstanding liability, but look at what we've combined here. Our savings has grown to $300,000, and our liquidity with the line of credit is over $677,000. Now that's a very different position to be in when you're 80 years old. So these graphical representations are what we're building and working and rolling out so that when a financial advisor is talking to somebody about their financial situation, we're showing graphics that are easy to digest. And then when that same person ends up talking with a Fairway lending officer, there's a similar set of graphics, or details, of course, when we're talking about a reverse mortgage, but a similar backdrop of graphics so that the person can understand what they're hearing from different financial advisors inside their life.